Hey folks, David Frost, LazyGapTrader.com, and you're looking at a live, real-time morning gap trade about to happen. I've got a level of $111.50. There it goes. I'm filled. Expedia is the stock. EXPE is the symbol. What I've done is I've given my members the level of 111.50 off of this gap up in the morning. Stock's up about 5.5–6%. What we're looking for is we're looking for a pullback in the stock. It's a short play, so I'm short Expedia right now from 111.50. And in these plays, you have to give them a little bit of time to work out. Sometimes it's a minute or two, sometimes it's less, sometimes it's 10 or 15 minutes. We don't know exactly how long it's going to last or how long it's going to take, but nevertheless, in this case, what I'll do is I'll talk you through the trade. So we hit 111.50, the stock's pulling back a little bit. Now it may go back up a little bit, it may punch through 111.50. This is a very, very strong level of resistance. Even if it goes slightly above that, I'm comfortable with holding this stock unless it gets too far out of the range in which I recommend the stop loss order to be set at. Now, in my course at LazyGapTrader.com, I teach exactly how to do this each and every day so that you can do it for yourself. I also provide my morning gap trades on a separate note or a separate service for those that want it. But in the course, you can learn how to do this for yourself every single day. I teach the precise methods that you can use in order to figure out where the levels that a stock would find support and resistance at, so that you can either take a long trade or a short trade off of a morning gap. So this stock was gapping up 4–6% at the open, and here we go right into a level of 111.50, and we'll bounce around here for a while. I can tell the market's up pretty good today, so it's not out of the ordinary for the stock to fight this level up here for a few minutes. That's common and normal market behavior. And it will probably go back up through 111.50 at this stage of the game because it didn't pull back very quickly. Sometimes it's only in seconds, but I can tell based on the market activity today, and the market's up pretty good, that we're going to fight this level a little bit, but it is a good level. So I'm not too worried about it. I know that the stock's going to come back down off this level. Even if it goes up to, let's say, 112.50, I'm comfortable holding this stock because there's no doubt in my mind that this stock is going to pull back. So we're going through it a little bit. I'm okay with that. I can stomach it a little bit. In my course, I teach my traders exactly how to do this each and every day and what the precise level of the stop loss should be. So we're going up. We'll probably at this point go to 112.50, 112.60, and then pull back again. That's ordinary and normal market behavior. We're going up a little bit higher. We're going to pull back, and my expectation is that in this candle, we could very well put in a doji candle, and that would be a good sign that the market or this stock would pull back from this level in a good fashion. So let's see what happens. We're still going a little bit higher here. It's sometimes these take a few minutes to play out, but so while we're waiting for it to play out, I'll just give you the scenario. So what I have is I have a course over at LazyGapTrader.com. This particular stock is being played as a morning gap trade. I have two methods that I teach in my course. The morning gap trades, where we look for stocks that are gapping up or down anywhere from 4 or 5% or more, and then we're able to isolate and identify the levels where they should pull back from in a gap up, so we play it short, or if a stock is gapping down, and a lot of times these are on earnings or some other news event, if a stock is gapping down, I teach how to find the levels on which we should find the best, most probable, highest probability support level where we could see a quick bounce upward in that stock and take both sides, either short or long, for a nice quick scalp trade. I also teach how to take a two-step trade where we can take an initial profit and then have a risk-free trade the rest of the way. most likely that's what I'm going to be looking for in Expedia today, a two-step trade. I'm going to look to take some of the profit off, and then I'm going to hold it for an extended period of time. So the stock's coming back down to 1150. And you can see how that 111.50 is a very, very important level in the stock. And so the two-step trade is where I would take part of the trade off, taking a profit, putting it in my pocket, and then holding the remainder for a larger profit at some point further throughout the day. Maybe it's another hour, maybe it's a half an hour, maybe it's 2 or 3 hours. Either way, what I teach is how to do that for an emotionless, risk-free trade. So we're coming back down to 111.50, and here's where we should see the stock pull back a little bit, and we may have to wait for the next candle to open. These are 10-minute candles. We may have to wait for the next candle to open, or even 2 candles, to find the stock down to a sufficient level where I would be happy taking a profit. In my course and the morning gap trades that I put out to members, I teach them how much profit we're looking for and how much the stop should be. And of course, there's a little bit of discretion involved. This is the market, right? Nothing's perfect every time, but within a given range, I teach how much to give the stock leeway on the upside, in this case, since it's a short play, and also how much profit to expect and where to take that initial profit in the stock. I teach exactly how to calculate those levels. And basically, these are mathematical calculations. Here comes the stock pulling back a little bit. So now we're in the money again. And again, it's going to bounce around the 111.50 because it's such an important level to the stock based on a mathematical calculation. And now we're about 20 cents in the money, and we should come down a little bit. But again, it's still going to bounce around here at this level a little bit. And that's not unexpected behavior. It's normal behavior. Things take time. The market takes time. It's like putting a cake in the oven. You got to give it time to bake. You got to give the bread enough time to rise. You have to give the stocks enough time to play out to put us in a nice profit scenario. So sometimes it doesn't happen immediately. Last week we had a stock that took 30 seconds to give a $2 bounce in the stock. Today, this one may take a little more time. Sometimes they're more, sometimes they're less. We take what the market gives us and we just roll with it. And you have to have patience in the market. That's the one thing that I can say that I would prefer to teach traders more than almost anything else, is having the patience to wait for a stock to play out in your favor. Sometimes it happens in a minute, but most of the time it takes a candle or two on a 10-minute chart. Sometimes it takes 10 or 15 minutes to play out. There's nothing wrong with that. Where else can you make $300, $400, $500, $700, $1,000 in 10, 15, 20 minutes? If that's the case, I'm perfectly willing to wait for the profit to play out. I don't have to have the profit in a minute or two, although it is nice when it happens. So now we're 30 cents in the money. And again, it's bouncing around a little bit. There's a high probability we're going to have to wait for the next candle to play out. You can see how it's bouncing up a little bit. What it's doing is it's fighting the 111.50. That's normal market behavior, okay? I'm most likely going to take some profit off when we get down to where I'm probably about 60, 70 cents in the money. I'm going to take some profit off, but I'm also going to hold some over for more profit throughout the day. And I won't be on this video. I'm not going to, this video is not going to last an hour or 2 or 3, but you can come back later in the day and you can see, or after you watch this video, you can pull up Expedia and see what happened. I'm most likely going to take profit when it gets down to about 110.80, 110.75. I'm going to take an initial profit, and we should get down there. There's basically no question in my mind we'll get down there. And then I'm going to hold off some remaining portion of the position. In this case, I'll probably have half the position. And then you can check later on to see how much profit that I got in this stock. I'm going to probably hold out for, over a $2 gain on the second half of the position. That's generally the way I'll play the stocks sometimes. Sometimes when the stocks gives me a nice healthy profit in a matter of minutes, I'll just take it off, put the profit in my pocket, and go about my business. But when these slower moving ones, especially in a market where the market is up healthy today and Expedia is fighting that 111.50, then I know that the trend is generally up today. So I want to make sure I book something, but that's one of the main reasons why it's taking a little longer. So it's coming down. We're not at my initial profit target yet. We'll bounce around a little bit more, but I'm going to put an order in to sell half my position at 110.80, and that'll give me a 70-cent profit on the initial half of the position, and then I'll put a break-even stop at 111.50 after I take the initial profit, and then I'll trail the stop lower as the stock moves lower throughout the day. And that's the way that I like to play these morning gap trades where I teach in lazygaptrader.com. And it's a course. It's a 17 video course, roughly 3.5 hours in length. And in that period of time, I teach you how to do this each and every day. So some days you may not have a gap play that triggers, right? We have to have the precise level that the stock gets to in order for the trade to trigger. However, it's normal and completely expected to have anywhere from 3, 5, 6, maybe even 7 trades trigger throughout the week. And if you project that out, we can have anywhere from, I'll even say on the low side of, let's say, 15 trades to 25 trades a week on just the morning gap trades. There's a whole nother strategy in the course, the same course at lazygaptrader.com that I teach, where I teach a gap fill strategy where we get a whole nother series of trades, anywhere from 3 to 5 a day at minimum. You can find a whole lot more than that. So in my course alone, I teach how to get anywhere from 15 to 30 trades or more a week in the course. The course is basically $200. It's $199. And in that course, you can teach yourself how to get anywhere from, I'll make up numbers, 20, 30 or more trades a week. Just taking the course, understanding the material, the methodology that I teach. And here we go. 110.80. I'm filled. I just got filled. 110.80 on the first half of the position. I'm out, okay, on the first half of the position. And now I'm holding. Now I have a stop at break even. My stop is at 110.80 was the number. I don't know if I said 111.80. 110.80, I'm out of the first half of the position. Now, 111.50 is where my first stop is going to be on the second half of the position. I will trail that lower as the trading session moves forward, just so that I don't get stopped out. I don't want to get stopped out too soon, but right now I've guaranteed myself a profit. I have a profit on half the trade. Now I'm looking for more. Okay, but the more may take an hour or two to play out, and I will trail the stop lower. And what that means is, as the stock moves lower throughout the trading day, I will move my stop down along with that stock. Some trading platforms have automated trailing stop orders that you can put in, or you can just do it manually. Move it down 20, 25, 30 cents at a time. There's nothing wrong with that. The stock moves down 25 cents, you move it down 25 cents. What you never do is you never move the stop back up. You let the market take you out. This is a scenario where I have a risk-free, emotionless trade on right now. What that means is I have a profit in my pocket, and wherever the market or this stock stops me out, I'm completely comfortable with that scenario, whatever it is. Now, it's just a matter of how much profit, not whether or not I'm going to have a profit. It's just how much profit. So right now, the stock continues to move down, and I'm going to end this video in a couple of minutes, but what you'll see is, at the point in which you're watching this video, you'll be able to see what happened with Expedia, and you'll understand most likely how much profit I was able to get. It's certainly going to be more than the initial profit, in my opinion. It's just a matter of how much. Will it be $1.50? Will it be $2? Will it be $3? We'll see how the trading day goes. It remains to be seen exactly how much profit I'm going to get on this trade. But really, folks, I don't care. It doesn't matter. I've already got an initial profit. What happens from this point forward is just a matter of how much. You really have to come over to lazygaptrader.com. Check out, I have a video that explains more about what the course entails. And then take the course. This is a money-making opportunity. It's a course where I give you the tools, the know-how to make profits in the market each and every day. You just have to have the willingness and the desire to learn and be able to do it for yourself. And I'll even give you my morning gap trades on a 2-week trial if you want them. And then there's a monthly subscription fee after that. So I basically give you all the tools you need to be successful in this business. And all I want you to do is take the time to learn it for yourself. I'm going to give you the tools. Do it for yourself. I'm going to wrap this video up. I'm David Frost, lazygaptrader.com. Thanks for tuning in, folks.